All right, so good afternoon, everybody.
Good afternoon, sir.
Yeah. So we're going to start off by looking at some pairs. Okay. First and foremost, we want to check Euro AUD as to how it's performing. All right, TP smash. I did a video on YouTube yesterday on why I expect Euro AUD to break this top. All right, then the market was right at this level. Market was right at this level. Right at this level. All right. There in that video, I've made it clear that that's broken market structure right here. That we wanted correction of this impulse down, although we wanted it to come to around this level to take a trade. But since it broke this area to the upside, we knew it was not going to come back. Okay. And then after this pullback, the right thing to do is to take a fib from this level to this level. Okay. Take that fib, and then your entry is 61.50 to 61.8. And then your TP is minus 0.618. All right, let's do it. This impulse leg, where is 50%? See the entry here, right here. Where is the stop loss, guys? Just a few pips below 78. And where is the TP, guys? Minus 0.618. Can you see? Exactly on that TP is massive and the market is reverse. All right. So there's something magical at minus 0.27 and minus 0.618 for TP, because market reacts at these levels. Market reacts at this level, guys. And that is why it's very important you know how to keep that level. All right, very, very important. Okay, if we have not kept our TP at that level, our profit will be going down right now. But nevertheless, what we are still expecting is a situation where this market will make a corrective structure and still make a move to the upside, because this is not the right kind of liquidity grab that we are expecting for the market to make a massive move to the upside. Of course, you know, I lay claim to the formation of this top. Can you see? Equal high. Can you see? So there are a lot of what we call sell side liquidity, okay, residing right at the top of this level. So market needs to break it for it to be able to sell to the downside. But you see, if market is breaking it, and we are going to, and this breakout is a liquidity grab, then there should be massive fall, massive sell-off to show that it has captured a lot of orders here, and there's now excess supply, oversupply, which will cause price to fall sharply. But can you see the market broke it, all right, but it did not come down sharply to break market structure, to break this structure, break this structure. Therefore, more upside is still expected. Okay, more upside is still expected. And another thing you should check is whenever there is break of market structure this way, you want to check this volume. You want to check volume. All right, I use this volume indicator very well to check what happened to the volume when the structure is broken. Okay, if it is liquidity grab, you see that the volume is going to be less. It's going to be less, even though the breakout is strong. But when you check volume, it will be less. And then this flush down, the volume will be big to show that we're on our way to the downside. But look at it, average. The flush down, the volume is not bigger than what it used to be. So meaning that big money mover are not in this market to the downside right now. So we still want a move to the upside. So if we want a move to the upside, then how should the market position itself for that move? How should it position itself? What we want is simple. Of course, the right size of corrective structure that we wanted here to take entry here, since it did not come, it's most likely that it's going to come over here. You are going to see consolidation here. You are going to see a massive breakdown here, probably to this other block right here. Okay, that is where our entry is coming. Okay, and in that case, you will see that right here you have equal top. It's broken, but not convincingly. So this will still stand as break of market structure. And then you have this 3 wave to the upside. It's a 3 wave impulse. So where is the 50 to 61.8 right here? This is the only level where we have discount in this market. This move you are seeing here, right here, guys. This move you are seeing here, from here to this level. The only area where we have discount is below 50%, because in my mentorship program, I usually discuss this with my mentee. If you have an impulse this way, this price here is the premium. Okay, middle here is the equilibrium. Okay, and here is the discount. Below equilibrium is the discount. So if you want to buy, when the market make a correction, if it's correcting between premium price, which is priced at the top, and the equilibrium price, you cannot buy. It is only when it crosses to a discounted price that you can buy. And discounted price is a price below 50% retracement. And in the case of a sell, a premium price, we talk of a premium price in the case of a sell. So if this one is making a pullback and is correcting this way, you need a liquidity grab here at this demand for you to be able to make a buy to break this top again. Do you understand? So this is the analysis of Euro AUD, just to add to the detailed analysis I did on YouTube. Another setup that I'm looking forward to is Euro card. Okay, Euro card. That's another setup. I've done it perfectly for you here. Euro card. All right. So if you look at Euro card on a daily time frame, you will see that right here we've been having impulse and correction, impulse and correction, impulse, correction, impulse, correction, impulse, correction. What do you need more? What do you need next? Impulse. Okay. So, but the question is this: where do we get in for the next leg lower? Where should we get in for the next leg lower? All right. You know, of course, you know, my strategy is a combination, my trading system rather, is a combination of Elliott wave theory, okay, Elliott wave theory or wave analysis, okay, demand and supply, and then liquidity. Okay, I combine these three strategies to make up my system, and it's been working perfectly. So when you see this analysis right here, so when I see equal top here, I see that there's a pool of liquidity over it that the market must take. And then you see this is an impulse. Why is it an impulse? It's very strong and it breaks this market structure. So that qualifies it to be an impulse. I need it to retrace to 50 to 61.8. And in this case, I think 61.8 will be ideal. Okay. When that is done, guys, all you need to do is to analyze the circumstances that will make this pair to move to the downside. So that takes me back to 4 hours time frame. There's something that is very, very important that you must note. Okay, let me give you from the buy side liquidity. Do you see this equal low, double bottom here? All right. So when this market comes to this level, a lot of people will want to buy here. Okay. Do you see what the market did? Took them out. And immediately it took them out, it make a move to the upside. This is what is called liquidity grab. It has taken liquidity from the low here and has made a move to the upside. Anytime you see it like that, guys, correction of this move to 50 to 61.8, preferably 61.8, that's your trade. Can you see? Make a higher high again. All right. Now, we cannot begin to sell this pair at this level until we see a structure that indicates that it has grabbed liquidity. Like you have something like this, you have a move like this, and you have a move down immediately. This is a grab of liquidity. This structure here, do you see it here? Of course, no. Of course, no. You didn't see it there. So for the mere fact that you did not see it there, shows that liquidity has not been taken. A big order is not in the market for the market to flush down. And so what do you see? You see a break of this level. If after breaking this level, it just moved down straight by breaking all this structure, then we're not going to be looking for upside again. It shows that it has taken enough order from here. No need to come over here. But right here, guys, you see that it came, it broke it, but it's coming down correctively. Not only correctively, here it has broken all the liquidity that are in the low of all this structure, okay? And by virtue of that, you remember what I told you? When there is, liquidity grab, the next thing is you are going to see a move in the opposite direction. Look at it here. Three-wave structure, consolidation. And can you see the move? Very fast. And can you see a move back? Very fast. This move back very fast has broken a market structure. And the move that below here is a liquidity grab. So what we have to do now to have a high probability trade is to take a fib. All right. When we take that fib, we'll note 61.8 to 78% retracement, and then take up your fib. So what we want to do is we want to see the market gradually, come to the downside and give us a setup, a buy setup. How does it give us a buy setup? When the market make a correction, a push down, and it's now consolidating here, all we want is that this pool of liquidity at equal low that is forming, let it break it down to take order from demand and make a move to the upside. This is the kind of pattern we want to see. And can you see replication of that similar pattern here? Can you see consolidation? We want a boom to the downside. This boom to the downside, take order from demand. Do you see the last candle that moved down? That is the candle that grabbed liquidity. And after I grab it right here, this green one, this blue one moved to the upside to break market structure. That qualifies this in itself as impulse. And then this is the correction that involves liquidity grab again right here. So if you cannot take a trade here, if your entry, there are two ways. If you want to make aggressive entry, you can make it right here, guys. With stop loss at 78, look at the impulse. This is an impulse. You are taking your entry at 61.8 and stop loss just below 78% retracement. And then your TP is minus 0.618. That's the projected TP. And in most cases, it's going to hit this TP. Somebody will ask, how do you get minus 0.27 and minus 0.618? Just extend your fib. All right, go to setting. You see setting on a trading view, go to setting, and then under style, you see if there's anyone I don't like, if I unmark it, you will not see it again. If I mark it, it comes there. So you look for empty column and put minus 0, type in minus 0.27 and make sure you mark it. type in minus 0.618 and make sure you mark it. You are going to see it appear on your fib level, and that is usually the best level for profit target. Okay, so that's a setup you are having right here on Euro card. Okay, then card CHF, we're expecting a massive move from card CHF. See, I've done it right here for you guys. Okay, you have a move here already, and then after this move, you want this correction to the downside. And can you see what I told you the other time about liquidity grab to the right fib level? You see it's making equal low. Can you see equal low? This time around, it has taken the low. Want it to take the low to the downside. Okay, that is a sign that your peer is getting the corrective structure is finishing. It's ending the corrective structure. Can you see equal low, equal low, equal low? Right now, we want a break of equal low to this level, preferably 78 in this circumstance. If you take a fib of this impulse right here, you can see that impulse has broken market structure right here. Okay, and because of that, any impulse that moves is very strong, that break market structure, is a true impulse. And the correction of such true impulse to 61.8 or 78 will be ideal to look for a buy trade. So right now at 0.7150 is the ideal level to take a buy trade for upon confirmation for card CHF. This time around, stop loss below the impulse, and the TP is where, guys? Minus 0.618. Some people will put, when they put two positions, they make first position TP to be minus 0.27, and then the second position minus 0.618. Okay, and this kind of setup usually give not less than 1 to 6, 1 to 4, 1 to 5 risk to reward. Do you understand now? So that's my expectation for card CHF. I'm really very, patient to wait for this setup. Another way that you can take this setup, if you want a tighter entry and you don't want to risk much, is that this is liquidity. Okay, now if there is break of this liquidity and the market is consolidating right here, you are going to see a move that will break internal structure. Where's the structure? You see this resistance? A move will break it to the upside. Wait for the market to give you discount and buy to the upside. And in this case, your entry is this level, your stop loss is right here, and then your TP. Okay, let's project the TP. You want to project the TP, we are going to take a fib of this impulse, just as we did the other time, and you target, you target minus 0.618. Can you see that this one is 1 to 16 risk to reward, whereas the other one we did was just 1 to 6 risk to reward? Can you see 1 to 16? Look at the ratio, 16.12. So refining your entry better will give you a better risk to reward than if you just enter on a higher time frame. Is that okay now? So that is another setup. Then Euro GBP. Euro GBP. If you look at this pair right from monthly to weekly, you see that it's bullish. Okay, it's bullish. Weekly is bullish too. Daily. Okay, can you see? Sooner or later, you are going to know that this move to the upside is just a fake move. The market is still going there. Okay, it took people all the way to the upside and dropped them. Okay, many people lost a lot as a result of this move, but thankfully I was able to make a decent profit from it. So now, what do you need to do? How do you need to approach this pair? in a higher time frame perspective. Okay, can you see that it's still making an upside for a good 3 days? It has remained in consolidation at this level. So what I normally do is to look for a sub-psychological level below this consolidation level, and that is 0.8850. Okay, 0.8850. Okay, somewhere here. Okay, and I take the pair to 4 hours time frame. So what I want to see right here is a consolidation of this pair and a break to the upside. Do you notice something here? You notice that right here you have equal low. In this condition, guys, this market will never make a move to the upside when it has equal low here. There are a lot of liquidity that reside below here. This liquidity must be taken before this market can make a meaningful push to the upside. So this our level become useless when we come to lower time frame. Okay, so what you will do is simple. Just mark this equal low, okay, and wait for more consolidation at this level. Okay, more consolidation at this level. Then from there, you break to the downside. Okay, break to the downside. Just a second, please. All right, so you cannot, this market cannot make a move right here, with this equal low. No, it will not be easy to make a move to the upside just like that. Don't expect such to happen. So what you should anticipate is that this equal low must be taken to the downside before you can expect, a push to the upside. So you see this three-wave structure with this equal low must come down this way. Okay, so most likely it's going to respect this level. Most likely it will respect this level. All right, then from there you can have a move to the upside. You can have a move to the upside. And as I said earlier, if you want to be conservative in your entry, if you want to refine your entry, you can wait. If the market is trending, if it's trending down, you want to see when internal structure is taken. As soon as you see that internal structure is taken, how do you know internal structure is taken? You see this last resistance. Can you see when you have a push after you have grabbed liquidity right here? You see, when I say grab liquidity, what do you mean? This last move to the downside, if it's very sharp and fast, and you now see the preceding move that follow it, that goes up very fast and sharp to the point that it took out this resistance, that is a break of market structure. So all you do in this scenario is to take a fib from here to this level, and then you target a discounted level. Where's a discounted level? A discounted price, a price that is below the equilibrium price in the market. Where is the equilibrium price, guys? Equilibrium price is a retracement to 50%. It's at equilibrium. But when it goes below 50%, it's well discounted. All right, it's well discounted. Where you have it this way at 61.8. Can you see at this way, at this level? From this level, you can take a buy, to the upside. And where is your TP and where is your stop loss? Right now, your entry is right here, and your stop loss is right here. Can you see just below 78? And this time around, you may argue it that your TP is minus 0.618. But if I am to do it, I won't do my TP like that, because I'll be looking at, I will not be using this small internal break of structure fib that I took as a yardstick. What I'll be using is this impulse. Okay, is this impulse, and then I'll be targeting this overall minus 0.618. because this is the impulse and this big one is the correction, and this one has to make a push higher. And that is how you target this big risk to reward trade, big risk to reward. That's about 1 to 20 risk to reward. You know, many people do not know that it is not the number of trades you take that makes you money. All right, it's not the number of trades you take that make you money. It is the risk to reward ratio, risk to reward ratio that make you money, risk to reward. So there are many people that in a whole week, they don't take more than 2 or 3 trades, but they make sure that anyone that they are losing on these 2 to 3 trades, they are not losing more than 1% of their account. And anytime they are gaining, they will gain like 2 to 3% of their account. This is how you do it in such a way that your 3 losses, okay, can be wiped, can be cancelled out by just 1 win. Can you see? 3 losses can be cancelled out by just 1 win. So in that case, even if you lose up to 5 times in your account, okay, if you lose up to 5 times in your account, it's not going to affect you because 1 win will wipe out all the, will cancel out all the 5 losses. Is that okay? So that is a setup on Euro GBP. I don't know if I have any other setup for you guys. I think Cardian. Okay, we are currently on Cardian, and I think it's doing fantastically well. Give us a lot of drawdown, but that's not a problem. Okay, it's doing very well right now. And right here, why did we enter so early that gave us drawdown? You know, let's look at 4 hours first and foremost. Let's look at 4 hours. We had seen this this impulse right here, so we want a correction back to this level before we continue to sell this pair. So essentially, what we are the trade we are taking right here is a counter trend trade. Okay, it's a counter trend trade. It's actually a low quality trade, but we just had to take it since there was nothing to take. And why did we take it? That looked like as if our entry was too early. We had already seen impulse here. We see this consolidation and a move down. So I have taken this move down as a liquidity grab because it moved down and it moved up immediately. So all I did was to take a fib of this and believing that this 61.8 was the entry. So I wanted this move to the upside. Okay, but what did he do? He consolidated a little and has to come down again to grab another liquidity. Thankfully, I had to move our stop loss by additional 30 pips. So it took liquidity but did not hit our stop loss. 2 pips to hitting stop loss and it moved to the upside. So right now, where is our target? Where is our target? Of course, this fib right now, you take this leg, okay? Now your entry here in this circumstance, 78, stop loss below the low, okay, and TP minus 0.618. So our TP is exactly 106.50. 106.50. That is the TP we set for this trade. And why are we so confident that this trade is going to work out? The reason why we are so confident is because you have this level here. Can you see? As long as you have this equal level here, okay, as long as you have this trend line here, market is going to continue to keep pushing higher until it clear this level because you have a pool of liquidity residing right at the top, right at the top. So that liquidity must be clear. For the sake of those who do not understand what we mean by liquidity, liquidity is just, in this scenario, just all the buy stops that are here, okay? All those buy stops, they are stop losses for somebody who is selling right here, selling here. When you are selling here, selling here, selling here, where do you put stop loss? Above here. So all those stop losses are regarded as buy stop, okay? And then market must come and take them out, clear all of them. After it has cleared all of them out, you now make a move to the downside. That explains why many of we retail traders will lose a lot of money in the market, because we tend to want to sell at equal level, equal high and equal low. We call it resistance and support. And as soon as you are selling there, you are positioning your stop loss for a sell right at the top and for a buy right at the bottom. And then market will come and take it up, take it out, and then move in your direction. So that is a bad way to trade, guys. Okay, so that is it on card yen. So we want this move. You can see right here. You see this equal level. What did the market do? Market has come, take up the equal level and flush down immediately. I told you that liquidity grab will occur when the market moves to the upside, break level, and immediately flush down. This is what is called liquidity grab. This market will not come back to this level again. Okay, not going to break that level again. So what we're expecting right now is for the market to come right here at the top, in between this other block. You see, there was a move to the upside before it moved down. Where is the space for that move? Look at the level here, between here and here. This is where we are expecting this market to come. In between this level, we want to see price action for a move to the downside. What kind of price action are you expecting there? It may be making a trend up, 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 up. Before it gets there, it will be consolidating like this. It will now make one move to the upside, catch liquidity from here. Can you see this level? Assuming this level is this level, okay? Take liquidity from here, and what happened? Immediately move down, break market structure. All this one, you have no action in the market. The only time you have action to take action, if you should have this corrective structure back to this level, you now take a sell to the downside, because this has become impulse, and this is a confirmed impulse in the sense that market structure is broken here. Okay, market structure is broken here. Then the correction to the premium level above 50% retracement is your trade to the downside. Is that okay now? It's your trade to the downside. So that is how that's how you look at the market. All right. So I don't know if we have any question. If you have any question, I want you to ask your question, or you should just send a chat. Just send a chat. If you have a pair that you want us to take a look at, you're supposed to have done that. That's the tradition. That's our tradition here. If you have a pair you want us to look at, you send it. We'll check those pairs. The one I have in mind, I have a look at them. So you have to send your own. Then we'll look at them. Then if you don't have any pair you want us to take a look at, it means you are not practicing well, you know. All right. So if you have a pair, send it down. Just type it on the chat box and let me take a look at it. All right. I'm waiting. Let me see it so that I will analyze it for you.
Good afternoon, sir.
All right.
Yes, sir. Regarding where you said card JPY is going to tap liquidity, is it the same thing as smart money concept, sir?
Yes, you can liquidity, smart money concept, they are the same thing.
But
yes.
How do we know the right zone to pick? Like, it is amazing on how you pick your zone. Like, how do we pick our zone, or where to check in for our order block and all?
Okay, you can see that you ask yourself a question. Where is the last move up that led to this massive breakdown? Where is the last move up? Can you see the level?
Yes, yes, sir.
So if you project it forward, can you see that that is the other block that needs to be mitigated. Okay, the market need to come right inside this zone. It can tap it here, tap it here, tap it here. It need to operate inside this zone, anywhere, any level within this zone before it can make a move to the downside. You understand? You ask yourself one question: where is the last move up that led to the massive breakdown? Identify it. Then another question you ask yourself is that breakdown that happened, did it break market structure? Yes, it broke market structure. Look at it here. Boom, market structure broken. If market structure is broken, then you have to target that zone. That's where you want the market to come back. You want it to fill this level. From here, you look for price action, make a move to the downside. That's why I was telling you that right here, you have equal top right here. So this market, the probability is there that it's going to break this top, come over here. And maybe before you get to inside this level, it will consolidate a little, break to that level, take liquidity, and then massive move to the downside. You now look for corrective structure before you join the sell. All right, here. Do you understand now?
Yes, sir.
Yes. Another question?
Sir, please, I would also like if you can help us analyze Australian dollar and Japanese yen, AUD, JPY.
Okay. AUD, JPY.
Yes, sir.
It's not in my watch list. So AUD, JPY, daily. No, monthly. If you want to analyze pair correctly, start from the monthly, daily, monthly, weekly, and daily for your direction. Then for your entry, 4 hours intraday time frame, 4 hours, 1 hour, 30 minutes, or 15 minutes. So you see right here on the monthly time frame, this pair is right at the top of the range. Nobody can be buying at this level. Okay, it's at the top. And you get to also look at the candlestick pattern that you see there. What is the candlestick pattern? Can you see that for how many months now? 1, 2, 3, 4, 5, 6. For 6 months now, this market has been in this range, meaning that it's really finding it very difficult to break to the upside. Do you see it like that? If not, how? How manage for 6 months? 6 months, the market has remained in consolidation in a monthly time frame, and then in a weekly time frame, you see something that is very significant with this pair. You see equal level here. What do you notice after this equal level? The market break to the upside. Well, why did it break to the upside and break to the downside immediately? What did I tell you? It means when market, yes, when market break to the upside and immediately flows down to the downside, it means this is not a break of market structure. It is a break to the upside to tap liquidity. All right, because if it's a break of market structure, this will correct to this level and make a move to the upside. Well, because it's a liquidity tap, it went up, and then smashed down immediately. Do you understand now? So the same thing is applicable to this level, equal level here, break to the upside, massive flows down. So we are now bearish. We are bearish on weekly time frame. So on daily time frame, if you look at it very well, okay, if you look at it very well, ordinarily we want a situation where this break here should come and break market structure. That's how it's supposed to be. This will come and break market structure before we look for correction and move down. That's how it's supposed to be. But you see that this move is slowing down. It's slowing down. All right. So because it's slowing down, we would like to check what is going on in 4 hours time frame. Okay. You'll notice that in 4 hours time frame, this market is already forming what is called an ending structure. An ending structure is when you have impulse, correction, impulse, and this correction is now like this. Okay, instead of correction, impulse, correction, impulse. Instead of impulse going up, it's correcting down. So anytime you see a structure like that, it's called an ending structure. An ending structure is going to break to the upside. And you need to test that ending structure if it's with a divergence. Can you see that it's with a divergence? It's making a higher high, higher high. This is making a lower low, lower low, lower low. So there's a divergence, meaning that the certainty of it going to the upside is there. And then if you go to 1 hour time frame, you are going to see something that is very instructive as far as this pair is concerned. Let's move this out. What do you notice, guys? You notice that you have equal level here. Do you notice you have equal level right here? Okay, what happened to that equal level? That equal level is broken ferociously to the downside and immediately come back to the upside. Do you notice that? So what has it done? What has it done here, guys?
It has tapped liquidity.
It has tapped liquidity, correct. So it has tapped liquidity. Once it comes down and go up immediately, it taps liquidity. So anywhere it ends here, what we are looking forward to is a break of market structure. I would love you to come up here and break this market structure. Okay, once you break market structure, all you have to do is to take a fib of this level. All right, you now begin to monitor how it's coming down, maybe forming corrective structure here. Now break down here. Once you break down here to this level here, all right, you may not even wait for confirmation. Once you know what you are doing, what you just do is to pick a trade right here. Okay, stop loss. Since you are picking it at 0.78, just put stop loss below the impulse. All right, and where's the TP, guys? In this scenario, TP become minus 0.618. Okay, this is how you look at it. And then by the time this one is coming up, you see this. What do you notice here, guys? You see this consolidation, guys. You see consolidation. What do you see here? To break this top, what happened there?
Flush down.
Eh?
Flush down.
This one that came up, what has it done by breaking this top?
It has tapped liquidity.
It has tapped because, yeah, liquidity grab and immediately went down. Right. That's coming down. Does it not break market structure?
It did. Yes, sir.
So this becomes an impulse. So all we are looking forward to here is for this market to correct to the upside. Okay, and how you know where it will likely correct to is by looking at this other block. Last push to the upside before the breakdown. Project it forward. So we're expecting AUD JPY to come in between this level. And for you to spot exact level where it's going to return is by watching the structure. It may be making correction like this. Just hold on to make a push, break structure, corrective structure, push down, tap liquidity at demand, make a move up, corrective structure. Instead of it this time around to tap liquidity at demand, it tap liquidity at supply. Can you see the difference now? If a market wants to push up and sustain the upside, it will tap liquidity at demand. But this time around, it is tapping liquidity at supply because it's not ready to go up again. It wants to come down. And you see in most cases, once it taps this liquidity from upside, it flows down immediately, break market structure. When it now make a correction to 5661.8, that is your trade to the downside. Can you see? That's your trade to the downside. That's how market works. That's how it works, guys. Okay, that's how it works. Okay, make this thing to the downside. You can see a lot of patience, a lot of planning. At times you look at it, it will push you a little lower, to push you a little higher, but it's still going that direction. So before, I used to want to try to maintain a very tight stop loss, and my trade hit a lot of stop losses because I want to maintain a tight one. All right, but these days I can't accept that scenario again. If it is 90 pips that is the required stop loss, let it be 90 pips there. If it takes 2 days for it to enter profit, no problem. 2 days, let it remain there. When I want to sleep, I don't sleep with my MT4. I will sleep separately. My MT4 will go and sleep separately. In as much as I'm not sleeping with it, and I'm not under obligation to sleep with my MT4, then let the trade be there and be dancing. I'm less concerned. Do you understand? So what you just need to do is to follow the rules. Follow the rules and leave every other thing to play. All right. So this is the projection, this is the planning that you have to do, and the execution you have to carry out on the JPY. Is that okay now?
Yes, sir.
Okay. All right. So thank you. So guys, so we meet next time. All right. Hello guys. Hello guys.
Hello, sir.
Yeah, so we meet next time. All right.
Thank you so much, sir.
Thank you. Bye-bye.
Thank you, sir.